Hey everybody, this is Paul doing my weekly video. It is 12:44 on April 15th. The market is currently open and we're doing a quick little update on a up day out of last week here. It's been trading kind of flat. Um, just give general update, my thoughts on the market, what I've been up to. Um, just these types of different things, just where I'm at currently, um, where I think the market's going, that kind of stuff. So let's look at some different trades that I've done since the last time you checked in with me. I added $100 to my account, right here somewhere. Bought 2 shares of Maine. I have been moving more money into QYLD. Now, you might be asking why I'm doing that. So, what I've done is I have been moving money from things that pay out on, like, say, the 9th or the 12th, once a quarter, towards things that pay out more towards the 1st or the 15th. So the goal here is to get very long term in my thinking. And if you look at this bar graph here compared to probably previous videos from say 3 weeks ago, you'll notice that there was a very big difference. So like for May, for example, I think it was in like the 140 range or something like that, and then my July would have been like say 120, and this is a really good example. Now all of a sudden it's at 168. So what have I changed specifically to kind of cause that? So what I've changed is specifically I've bought stocks that pay in these off months, because these are your big months right here. The Septembers, the Junes, that kind of thing, Decembers. So, and March, obviously, this is the big one. But what I've done is I've moved my stock portfolio around in a way to take profits for one on things that I think did really, really, really good under coronavirus that might do a pullback. And then also just to kind of position a lot of my stock payments so that they're around the 1st or they're more towards the 15th. So, just looking around here. I'm not sure why they're loading O as the 7th right here. This is supposed to say the 15th. This is weird. I don't know why O is saying the 7th. Unless O changed their date that they pay out their dividend, which hell would freeze over before that would happen. Yeah, that makes no sense. I don't know why it's doing that. Anyways, it's E-Trade doing some E-Trade stuff. But as we look around, so the things that I've moved around or the things that I've bought. So one thing I did do is I bought into a regional bank that's local to me. Um, I put in money into a stock called Regions Financial. I have been really bad at timing this stock. I bought it at 13, it went down to 7. I should have bought it at 7, it went up to 20, that kind of thing. This is one, I'm just going to hold it. It does one of the things that I wanted to do. It It's a bank, it's local. I know it's a good bank. There's a few of these that are local, like Hancock Whitney is another one that's local, and I know people that use this bank, they're loyal to it. They do loans in the local area for Louisiana and all along the South. Um, they pay out in April, and they have, the dividend's not the most amazing thing, but it's almost a 3% dividend. It's a pretty good stock. 3% dividend. 16 cents on a $20 stock, not too bad. So it's definitely one of those ones. It pays out exactly when I want it to, and it's on one of these off months that I've been focusing on. And it's also cheap, and it's also local, and I know it's also a very big stock that's growing. It also profits. The reason why it's down today, by the way, is because of this. So if we look at bonds, and this is just using the CNBC thing right here, they have nice little drop downs. But you can see bonds are on the long, or actually on the what they call the belly of the curve, are rallying pretty big today. There's a few things that people, either the inflation is as high as they think it's going to get and it's going to fall, or there's some people that think that the Federal Reserve is in here buying. These are pretty big moves. Like this right here kind of stuff is pretty big moves. Like this right here going below 1.6 today was pretty big news. That's actually a really big thing. First of all, it's extremely good for the Nasdaq. So that's why you have pretty much everything rally today. And if you notice, the Nasdaq's really up compared to everything else, and the reason why is because these guys need low rates. There's just a lot of debt finance companies in there that are really relying on just low, cheap debt, or just low rates for to be able to issue their debt very cheap and to grow their companies. That's why they're called growth companies. They grow on debt. Um, so I think the idea that the Federal Reserve is in here, uh, moving things around, buying a lot of things for their mid-month kind of stuff, that somebody tried to explain it to me, and I was like, okay, but you can kind of see what's going on. The there's a there's a huge rally. This is just huge. Like this kind of move in one single day going down. It's either like the Japanese. We're talking country kind of stuff. It's not even a hedge fund. This is like a country coming in and buying somebody's debt. So the only thing that could do that would be like the Japanese or some other country like China or it's got to be the Federal Reserve. I'm 100% on board with the Federal Reserve theory. Um, but somebody was saying that this is just random people that just kind of saying, this is kind of temporary, and they think the rates are going to go back up as we actually do get inflation. So it's one of those things to watch. Normally, when you see, like last year, when you saw this kind of move, people thought some really bad stuff was coming, and that was kind of a hint that you need to get out the market now because this is about to go really bad. This is where people run to whenever they want safety. It's called literally a safety trade. But what's going on also is at the exact same time, everything else is rallying. This, it doesn't work like that. Normally, when these go down like this goes down. Because everybody's taking this money and putting it over here. But that's not what's happening today. Somebody really big with a lot of money is driving this rate down, and this is up. So it kind of tells you that that's probably the Federal Reserve. I'm more on board with the Federal Reserve idea. That there's if you look at the news networks, they were trying to figure it out. They think maybe it's like, oh well, these numbers are as good as it's going to possibly get. You had the retail sales today, and it's as good as it's possibly going to get. Um, and the stimulus is over. The stimulus isn't over. I just linked an article. And if you follow me on Twitter, I'm sorry if you don't like my views on politics. I post mostly about politics, but every once in a while I'll post something economic. So there's actually more checks on the way. So not to adults, but these checks are going to start in July. And if you have 2 kids, this is $300 per child. If you have 3 kids, $900. And this is actually a forward on the child tax credit for 2021. So what you would normally have to wait once a year to get, they're kind of pricing it so that you get it throughout the year. This is an experiment that the government's running right now. Personally, I hope they make this permanent because the child tax credit makes no sense to pay out once a year. It's the stupidest thing I've ever seen. If you want to encourage people to have kids, if this is your goal with the child tax credit, literally pay them every month. This will be really helpful. This is one of those things in the stimulus that a lot of people just don't realize is also coming. They thought they got the check in March. Oh, there's my check in March. But what they don't realize is that this happened also. So that's something else that's going on. So let's see some other stock moves. So one thing you'll notice is I actually took profits on Caterpillar. I took a lot of profits on Caterpillar. I've also been selling some on my Home Depot. It's because it was just up so much. Caterpillar I was up 70, almost 80% on. Normally you would say that's insane to sell at. But if you want to know why I sold it, so Caterpillar, I think I only own like 5 shares on it. Okay, so I own 5 shares of Caterpillar. So if you want to know why I sold Caterpillar, this is why I sold Caterpillar. So say if I had 5 shares of Caterpillar, I was up 70%. I made some stupid amount of money on like $600 or something, or $700 just from capital gains from the stock just going up. If I own 5 shares, let's say it pays out once every 3 months, okay? That's $5. That's once a year, okay? That's once a year right there. See there, that's $20 a year I get from that, okay? And the dividend rate on it is 1.77%. If I go to my gains and losses, where's my gains and losses? This is the little thing that you use to track how much you actually owe at the end of the year here. I mean, if you put these two next to each other, where's it at? Where's Caterpillar at? See this right here? See this? $690.97. It's insane. It's like you would have to be crazy. Like, of course I took profits on that. Like, it would take me 34 years to get the dividend profits off of Caterpillar that I just made selling the stock just completely out. I'm not waiting 34 years, okay? Just to get the dividends to add up to the sheer amount of capital gains. Now, I am going to pay taxes on this, obviously. Actually, I'm going to pay taxes on this up here, minus that, because I suck on some trades and I sold out at a loss. Some of these I did sell to get into other opportunities, but it's basically at the end of the year, it's this number minus this number, I think, kind of, I don't know, E-Trade figures that out for me, but that's the general idea. It's this number subtracted from this number. And if you want to know how many times I've traded stocks this year, by the way, you basically, cause I think they charge like 1 cent per stock. Everybody gets charged a cent. You might not realize it, but you're getting charged a cent. But it's probably like 115 stock trades I've done. But yeah, of course I sold that. I'm not waiting 34 years to get dividend returns on Caterpillar when I've made a 74% return. And there's a few other things I can make that case for. JP Morgan, for example, I can make that case for it. But, you know, it's one of those ones where I think it has much, much further to go. This gets up to 180. I could easily see selling all 7 shares of it. But I'm not. That's kind of one that I'll hold. Caterpillar is way too reliant on the economy. That's one of those ones where it's like, if all of a sudden everybody thinks there's not going to be an infrastructure bill, it falls by like 50%. It just jumps too much. It's one of those industrial ones. I've been up in my position into QYLD. I did an entire video on this where I went through the prospectus and explained why I do not believe this is a Ponzi scam. There's a few people on YouTube making a few claims about this stock that have no idea what they're talking about. 95% of what's in this 95% of what's in this, where's it at? This $2.2 billion stock right here, or this $2.2 billion ETF right here, is all stock. This is literally just a NASDAQ tracker with covered calls, or with calls on the end of it. So if you look at it, it literally says right here too, 102 stock holdings. You can look at the prospectus. I showed you how to do that on that one video. And if you look at it, this literally tells you percent of assets. That means 11% of this portfolio is made up of Apple. And just look at the stocks. I mean, these are the big boys. So a majority of this is made up of stocks. And then like say 5%, I think, well now it says 3%, it was 5% previously, but 3% of it's just made up of covered calls options where they make extra money on the side and then buy more. When I looked at this last time, this was 1.8 billion. This is a very good one. One that I've seen Joseph Carlson put a ton of money into. He's another YouTuber that's pretty really good on his videos. He's got a great mic too. He's got a great tone when he talks. So this is a decent one. The only reason I haven't jumped into this one, and this one's like a mix of Dow. It's also made up of it has more options exposure to it. So these actually tell you the expiration dates on the options. These rotate. This looks closer to, this is actually more. So this is just 1 out of 10 probably. This has more options exposure to it. So, you know, this could easily go more sideways. And if you actually look at it, I guarantee the chart jumps around more. And another reason why I did not jump into this one versus QYLD is this right here. That start date on it doesn't work for me because this has not been tested by a true recession. This was started at the end of, well, I guess if you say the recession only lasted so long, but this started right when the market started to really just, oh, you know, everything's recovering all of a sudden. This hasn't been through a recession. Also, it hasn't had time to do this. And if you look at this right here, this is one thing that turned me off about it. So it starts out at 49 cents a share, and then it jumps to 29, then it jumps to 45, 43, 52. So it jumps around. So now it's back down to 32, 35 as more people jump into it. So it can only it it only has so much money to pay out, and then also you run into the simple problem is that it's not over $1 billion. And I've seen some of these at $20 million, so it's kind of hard to This is actually a pretty decent sized one. Plus, it's run by J.P. Morgan. My problem is that it just simply hasn't been through a recession, and it also the dividend hasn't had time to settle out. So this price has not settled out. But if you compare that to QYLD, and why I prefer that as more of or a Nasdaq tracker, it started in 2014, and you see outside of recessions, it's pretty constant. And then also, you notice one big thing about the stock. It stays between $18, and I guess the max right here would be right here. It stays between 18 and 25. That's a lot more than what Jeppy's doing, where it kind of jumps a lot, and it still has a lot of time to, if you want to be one of those early investors, hey, go for it. Because, I mean, it's literally just a stock holding thing. But this is one of those ones that kind of, it stayed consistent. So, and the dividend per month is a little more predictable. It's between 17 and 25, I believe it's at, or 23 or so. I guess the maximum amount might be in there, but if you look at it, it's like going all the way back to probably when it started. But even when it started, the dividend was more consistent every month. So if this is one of those ones that you kind of think, okay, like 10 years, 20 years from now, I want to retire off of this, you need consistency. Like, I need a stock price that's pretty consistent and that pays out at a certain price. You can't expect to get paid a certain amount each month and then all of a sudden come up short or something like that. So that's why I just prefer QYLD. And then also specifically, it's a Nasdaq tracker for me. That's literally that's the purpose of this one, because I don't have any direct exposure to, like, I don't have Apple, for example. You see, I don't have Microsoft in here. Maybe someday when I actually do retire, I might take the $100,000 that I have in QYLD or something like that and distribute that out to, like, Apple, that kind of stuff, and Microsoft. That, I might distribute it out someday because I won't care by then because I'll be getting so much in dividends. But right now, QYLD is just it's a good place to be. You might also ask me, well, Paul, this is one thing that I also considered as kind of you do like these little thinking games. So if you think to yourself, okay, I have 51,300, okay? And you have QYLD that does 22 cents a share. So if you figure this out right now, divided by 22.825, 2247, okay? And then I believe that's at 23 or 22, 22. That's $494 I could potentially be getting a month times 12. That's how much I could be getting a year. So you might be asking yourself, why don't you just put it all, like every single dime? So why don't you just put every single dime? Because if you look at this number is bigger than this number. Well, we go to my buddy Payne over here. This is true. So if you have a little stock chart, this is a stock chart. Okay, got your stock chart like that. Okay, QYLD. So remember what I said, it's between 20 and there. And this is one of those ones that you're not supposed to sell for capital gain. So I guess the best way to say it is it kind of sits, in that range. Okay. So the problem is that yes, I could be consistently getting this every single year. Correct. That is 100% correct. The problem with that theory is that the stock never moves, or the ETF never moves. See how it never moves? It just kind of stays in this range, and going all the way back to 2014, it's really been in that range, 18 to 25. So the reason why I don't do that is because of this over here. See this right here, 53% gain, 33% gain. These types of moves. See this 585 right there, that this 381 right here, these types of things. And if I came back to this portfolio, if I just never logged back into this portfolio for 10 years, I can guarantee you that these would probably, unless we end up in a depression, which I hope we don't, but these gains right here would be much higher. And I asked Gen X dividend investor, actually I asked him in his content, I'm like, he doesn't even show these columns. See this total gain and this total percent? He doesn't even show these columns. And I asked him why, and he's been holding some stock since 2005, that kind of thing. And I think he told me once he actually had added it up, I think some of his things were up 10,000%. So that's the reason why I don't throw it all into QYLD, is because this right here, the total unrealized gain, this part right here will just go up. And then you also have this right here that I've made 4 months. This total gain I've already made in 4 months. Well, if you subtract this. But this total gain I've already made in 4 months, it's already pretty much half of that. And that's if I didn't even cash out this part right here. Like if you came back in 10 years, I guarantee this right here would probably say like 50,000, 70,000, 80,000, I don't know, a million. So that's the issue with thinking that, oh, well, you know, why don't I just take it all out and throw it into that one thing right now? It's because it moves sideways. It's supposed to move sideways. That's why I like it for my NASDAQ exposure. But the issue with it and why I don't have every single dime in there making this and then that right there every month is because of that. Now, I would be buying more shares and they would be kind of adding on each other, but because it's trading only sideways, I would only be making, and it's not even this 7 or this 12% number you see right here. I explained this in the other video, but that's why you don't just throw everything into one little thing. Unless you know, there's some people that do that with Tesla. They just throw every single dime into Tesla and then they just come back in a few months and hope it's up. And they've been lucky so far. But that's why you don't do that. And then also just the simple fact that it could just go down to, you know, there's always that chance it goes to zero, that kind of thing. They shut the fund down or something, you know. But that's one of the reasons, is because you have to, when you can do those kind of things, well, why not just throw it all in here? Well, you know, you want to stay diversified. But it's tempting. I promise you it was. But after I kind of thought about it for a second, you realize, okay, if you look at this, I just put this money into, what was this? This is where's PPL at? Or not PPL. There's probably like good examples in here. Maybe O is a good example. Where's this O example? This was part of the stimulus. So if you look at the stimulus, I'm already up. So this is $2,000 that I put in here. Just straight up $2,000 for my stimulus. I'm already up 3.84%. But if you look at this QYLD money, I'm only up 0.76%. So yeah, I'm getting paid a ridiculous dividend. That's really nice, which probably will drop someday, maybe, or maybe it'll go up. But as more people pile into this, more of a dividend's got to pay out every month, so the dividend might end up going down. But you got to remember, you know, you're just not getting that return from the stock price appreciation. So that's another thing you have to consider whenever you're kind of making those decisions. So those are the different stock moves. One other thing that I bought into, so you might be asking, well, what did I do with the Caterpillar money when I sold out of it? It certainly didn't sit in cash, because cash ain't giving me a damn thing right now. So what I did with the Caterpillar money right here, see this Caterpillar money right here? I threw it straight into coin, and I bought 5 more shells of QYLD actually. But coin is basically the exchange for all the crypto. This looks like the one that's going to be the one that's kind of in charge. And I was stupid and bought it at the top. But do I think this is going to be much higher than $422? Yeah. I mean, they're managing a trade. Their coin is literally bigger. I think, what was the one guy? I think coin is literally bigger right now in the amount of assets that they manage than a majority of the banks, like a lot of the banks. They're already managing it. If you look at you kind of have to look at Bitcoin, Ethereum, but it's close to $1.5 trillion worth of assets that process transactions on this thing right here. That's literally what coin is. So I'll probably end up holding this for a while. It doesn't pay a dividend. I said in one of my AMC videos, I think it was when I made a video about AMC and GME and all that. I'll have $1,000 where I'll just throw it into one of these. I call this a YOLO stock. I'm not even really calling this a YOLO stock because that's kind of what this is. Where it's just one of these stocks where I just throw it in. It's not on options or anything like that. I just own the stock and we just kind of see where it goes. It's just $1,000. This could go way down. This could take me a year to recover my money, but it's just one of those ones where you just kind of just hold it and see what happens. As it stands right now, it's down. Could be up tomorrow. There's no telling what it's going to do. So we'll have to see where it goes. It's just one of those ones where I just grabbed 2 shares of it. I did the same thing with kind of Home Depot. I did that with Caterpillar. I just grabbed it under the assumption that it would probably go up, and I was definitely right about Home Depot, and I was definitely right about Caterpillar. Um, I have a feeling I'm right about coin, but we're definitely going to have to see where it goes. So it looks like it wants to go up. It's moving all around. It's trying to find a stable place. It literally just debuted yesterday. So we'll definitely have to see where it goes. Well, if you have any questions, let me know in the comment section there. Thank you all.